statement of cash flow last time. I just want to finish off that and then we'll get on to the papers. So last week we learned about statement of cash flows. I hope you all would have revised, but let me just quickly give you a synopsis of what we learned. So we looked at LKS 7, which is on statement of cash flows. Statement of cash flows. You all can see the board, right?
Yes, sir.
Right. So what we were looking at under statement of cash flows was basically about cash flows of a company, or maybe in your case you might get a bank also. So cash flows are of two types. We call it as inflow and also outflow. Rather, cash inflow or cash outflow. So cash inflow is considered to be a positive to the company. It's a positive factor to the company. Why? Which means that more and more cash is coming into the business. More and more cash is coming into the business. Whereas cash outflow is considered to be a negative to the business. A negative to the business, which means that cash is going out of the business. Cash is going out of the business. And we also looked at that these inflows and outflows can be grouped into three major activities of the company. Right? Three major activities of the company. What are the three activities?
Operating activities,
Okay.
investing activities, and financing activities.
Right, very good. Operating, investing, and financing. Right. So what does operating activities consist of? What does it have?
Revenue producing cash flows.
Yes. In other words, it is all your core business. If you are doing in a trading business, all your business related activities and the corresponding cash flows related to those business activities are captured under operating. Say for example, your sales and your cost of sales, or maybe your revenue, and in order to earn that revenue, whatever the costs or expenditures that you have incurred, all those are captured under this. So in other words, this is talking about the cash inflows and outflows of your day-to-day operations. Day-to-day operations, right? So we also capture here the movements in your working capital. The movements in your working capital. So what is working capital now? What is working capital? What is working capital? Working capital we learned long time ago. What is working capital? Now in your balance sheet or statement of financial position, you have, what are the items you have? You have the fixed assets and the current assets. So that will give you the total assets. Then you have long-term liabilities, current liabilities, that will give you the total liabilities. And then you have the equity, right? So this is your balance sheet. Am I correct? Or have you all forgotten everything? Is that correct? Under LKS 1, we learned all this. What are current assets? What are current liabilities? Right? So working capital is actually current assets minus your current liabilities. Current assets minus current liabilities. Right? So we learned something called current ratio. What is current ratio? What is current ratio?
Current assets divided by current liabilities.
Current assets divided by current liabilities. So from where do you get it? From the balance sheet, right? So what we are basically talking about on the operating is all the movements relating to your revenue producing activities plus the movements of your working capital. The movements of your working capital. So there could be positive cash flows as well as negative cash flows. There could be positive cash flows as well as negative cash flows. So our objective is to establish what are the positive cash flows, or in other words, cash inflows. What are the negative cash outflows? That is cash outflows. Cash outflows. So that is what our objective is. Similarly, we also spoke about investing activities. What do you mean by investing activities? So now look at the balance sheet. We have captured this. We have captured this. Right. Now what are investing activities?
Purchasing and disposal of long-term assets.
Purchasing and disposing of long-term assets. Or in other words, we can say we have fixed assets. We have fixed assets, right? Let me put it like that, then it will be very clear. Very good that you highlighted it is long-term assets. Let's say long-term assets, right? So when you look at long-term assets, which means, now by the way, what is current asset and what is long-term asset? What is a current asset and what is a long-term asset? I told you all, revision is very important.
Long-term assets means period is more than 12 months.
Yes, yes. So current assets means anything that is receivable to the business within a period of less than 12 months. Isn't it? You have to go back and revise all your notes on the LKS 1. Anything that is receivable. Receivable means it is from an asset. So anything that is receivable to you within a period of less than 12 months, that is a current asset. Anything receivable more than 12 months, that is a long-term asset. So for example, you can have investments which might be maturing in 5 years time or 10 years time. You have fixed assets. Fixed asset doesn't have a maturity, so it is forever like thing until you dispose it. Similarly, current liabilities is what? Current liabilities?
Anything payable within the 12 months.
Yes, anything that is payable within the next 12 months. Within the next 12 months, payable. If this is receivable, this is payable. Similarly, anything which is payable after 12 months. After 12 months. That is called a long-term liability. So for example, if you take a bank might have issued debentures. Debentures is a financial instrument, right? You can connect one particular topic with so many other. So I started with LKS 1, we went into certain other factors. Now I can connect it to financial instruments also. So long-term liability, you can have a debenture. The debenture is a financial instrument. So this financial instrument can be repaid after 12 months because debentures are generally issued for a period of 5 years or 7 years or 10 years or even more than that. But generally, these are the maturities. So basically, until the maturity is more than 12 months, you will have it here. Once it comes closer and closer, it comes here, right? So you have to have that in mind. Anything which is payable within the next 12 months from the date of the balance sheet is a current liability. Anything payable more than 12 months from the balance sheet date it is a long-term liability. Right. Coming back to cash flows. So you have to capture here all the working capital. But what do you mean by investing? As rightly said, you might have long-term assets. Long-term assets, which can be either purchased newly or could be disposed. So some of the things are where you might purchase new fixed assets or you might get rid of the existing fixed assets. So that is a purchase and also a disposal. Similarly, you might have long-term investments. So these investments you can make more and more, or you can dispose it. You can dispose it, or you can get rid of the investment. So when you get rid of the investment, now two things can happen. Right? When you go and make a new investment, what will happen? What is the outcome? What is the outcome? When you go and make a new investment, what is the outcome? Now today is the time that you need to talk. What is the outcome when you make a new investment? You have to give up one of your existing asset. What is your existing asset? Cash. You will bring in a new asset, which is your investment. So when you make a new investment, what will happen? There is a new investment. There is a cash outflow. Why? Money is going to go out. Money is going to go out. Now, you dispose the asset or dispose the investment. Now, what is going to happen? I go and give back the share certificate to the person who have given me that. So now they will have to pay me back money. So that is a cash inflow. These differences have to be known. When you take in a new asset, there is a cash outflow. When you give up an asset, there is a cash inflow. Similarly, that is all about on investing. So there are positive cash flows, negative cash flows. What are financing? What are financing activities? What are financing activities?
Changes in the equity capital.
Changes in your capital plus there is a small portion that you need to remember. There could be borrowings also. There could be borrowings also. So borrowings means something like debentures or long-term borrowings, which is coming from long-term liabilities, right? So anything that you have new shares issued, yes, that is a financing activities. Okay. So financing activities also will have positive plus negative. How can it happen? When you say you go and take a new loan, you go and take a new loan from the bank, what will happen? When you take a loan, money will be coming in and your liability will go up. Why? You need to repay the loan. So there will be a cash inflow. Right? There will be a cash inflow. But when you repay the loan, what will happen? Now when you repay the loan, money has to go out. So there will be a cash outflow. These are the basics. If you can know these, you can play with the statement of cash flow. The basics have to be understood. So what we learned last week, I have given you in a synopsis to understand what all about statement of cash flow is. So just go through it again for yourself. And if you have any questions, please ask now, because we are going to do the past paper questions. I'll give you 1 minute. You can ask if you have a question. So in addition to these, there was one other thing that I mentioned last time. That is increase in assets or decrease in liabilities. What it is? It is a
Cash outflow.
cash outflow. Very good. Cash outflow. Right. In both instances, what will happen? When the assets grow, obviously you have to give out money. When the liabilities get reduced, which means I have to pay. Without me making a payment, my liabilities won't come down. So which means that is going to be a cash outflow. Similarly, decrease in assets or reduction in assets and increase in liabilities. What is going to happen? That is a cash inflow. Now you must be wondering how it can be. Decrease in assets. Say for example, I have lot of stocks with me, inventory. Now the moment I sell those inventory, what will happen? People will have to pay me. So when your stocks go down, that is a decrease in asset or reduction in asset, what is going to happen? Cash is going to come in. Similarly, increase in liability. Now I don't have liability now, but I go and borrow from the bank. So when I go and ask for a loan from the bank gives me a loan. So what will happen? My liability goes up. But on the other side, cash is going to come into the business. Cash is going to come into the business. This difference you have to understand. Increase in assets, decrease in liabilities is a cash outflow, which means it's a minus. Decrease in assets and increase in liabilities is a cash inflow, which is a positive. So this we call it as a cash inflow. This we call it as a cash outflow. Okay. Are we done? Any questions? Because why we keep it, I of course do the cash flow statement at the last. That is what I have been doing for the past 7 or 8 years. I have been doing the statement of cash flow at the last because that is where you get captured everything that you have studied. Right? During the course, whatever that you have learned, single-handedly can come into this. So that's why I keep it for the last. By the time you come to statement of cash flow, you should have a thorough knowledge with all what you have learned. Because it can get connected from anywhere. Any of the things that we have learned can get connected. It's not a separate topic as such, where it talks about cash inflows and outflows. Right? Then we also looked at how a cash flow can be done. There are 2 methods. What are the 2 methods?
Direct method and indirect method.
Direct method and indirect method. So I explained what is a direct method. Direct method is where you can identify your cash inflows and outflows from its source. Right? That is, I have received this much in cash sales. I have received this much in maybe say some other income. I have paid this much for my purchases. Right? So you need to identify each and every element of your ledger into what is the cash inflow and outflow. Now that is not practical at all the time. Now businesses grow, transaction volumes grow. So it is very difficult or impractical for businesses to capture all these cash flows from its source. Thereby, what they do is they look for an alternative. The alternative is where it is the indirect method. So under the indirect method, what do? We capture or we start from the profit before tax or profit after tax. Depending on the type of the question, you can start from anywhere. But generally, we do it with profit before tax. Okay, that is where we select profit before tax if we have any details pertaining to taxes in the question. Right? If we don't have anything related to taxes in the question, we can straight away go to profit after tax. So from the profit after tax, we have to incorporate certain adjustments. Now tell me, what are the adjustments? What are the adjustments?
Depreciation.
Okay. What else? I think I gave a pro forma template. How many of you looked at it? There is a pro forma template in my presentation slides. How many of you looked at it?
Provisions.
Yes. So there are various types of adjustments that we need to do. Say for example, depreciation, profit on disposal, loss on disposal, fair value gains, fair value losses, right? Those type of adjustments we have to do. But we need to know why we need to do it. Because from the cash flow statement, we are trying to identify what is my actual cash position. But when you say profit before tax or after tax, it has a lot of elements which doesn't have a cash impact. Right? So our objective of doing the indirect method is to say we start with the profit before tax or after tax, and I will exclude all my non-cash elements. All my non-cash elements. Say for example, depreciation. Depreciation is a book entry. Why do I call it as a book entry? I will debit my depreciation expense and credit accumulated depreciation. There is no involvement of cash, but it has an impact to my profit. Why? My profit comes down. So when my profit comes down because of this depreciation adjustment of book entry, then when I am doing the cash flow, I need to eliminate it. So what do? I go and add back the depreciation. I go and add back the depreciation. Similarly, I make a provision for bad debts or provision for expenses. Now say I have not paid my electricity bill. So I make a provision, or let's say I have not paid my water bill. So I make a provision. How do I make it? I will debit the account water bills expense and credit water bills payable. Water bills payable. Because I haven't paid. But under the accrual concept, I need to make this provision. Okay. Now what is accrual concept? So I'm not going into detail into that. I leave it to you all. So you must be knowing what is accrual concept is. So under the accrual concept, I need to make a provision. Now how do I make the provision? I will debit my P&L water bill expense and credit water bills payable. Now where is the involvement of cash here? No cash. There is no involvement of cash. But because of this adjustment, my profit has gone down. My profit has gone down. So what do? I need to add back this amount. I need to add back this amount. So any provisions that you make for expenses, you need to add back. Any provisions that you make for income, you have to deduct. That is what. Then there could be profit on disposal or loss on disposal. Now, what do you mean by profit on disposal? Can you recall case 16? What is profit on disposal? I did lot of questions. So you can think of disposal is a common thing, whether it is a fixed asset or an investment, it can apply to anything. Right. What is a disposal? I have an asset. The cost is 100,000. Accumulated depreciation, let's say 40,000. Right? And I disposed it, that is sale proceeds. $80,000. I sell it for 80,000. Right. Now let us do the disposal of fixed asset account. Disposal account. Right. You are going to tell me the double entries. What is the first entry? What is the first entry?
Cost of the machinery.
What is it?
Cost of the machinery.
Cost of the machinery. Yes, you tell me double entry. I need the double entry. I need the double entry.
Machinery account credit and disposal account debit.
Yeah, let's say I'll say this is a machinery. Right, okay. Now tell me. What is the double entry?
Machinery account credit and
Yeah.
disposal account debit.
So when you are telling or writing a double entry, the first thing should be your debit. You have to always talk about the debit, right? Remember that. Even when you are answering or maybe say when you are writing something, it has to be always the debit first, right? So what will you do? You will debit with the disposal account for the cost 100,000. And you will remove the cost from the asset, right? That is number one. Number two. Number two. Quickly, we can't spend more time. We have to do lot.
Accumulated depreciation debit, disposal account credit.
Right. Disposal account credit. So we'll credit the disposal account by debiting the accumulated depreciation. Accumulated depreciation. So that will be 40,000 here. Number three. Entry number three. Quickly.
Cash account debit and disposal account.
Yes. Because I have received money. So cash account debit. Debit cash 80,000. Credit the disposal account 80,000. Right. That's all. Now you will have to balance the account because end of the year you can't have anything remaining in the disposal account. So 100, 120. So sorry. You take the total. The higher side is 120. Right. So now we have a amount on this side, which is 20,000. Now tell me what is this 20,000 is? Profit or loss?
Profit.
It's a profit. Profit on disposal. Profit on disposal. Now, what is actually happening? In your profit, now for the cash flow, when you take the profit after tax, in your profit, there is 20,000. Right? Are we correct? You have a profit of 20,000. But is this the amount of cash that you received? No. The amount of cash I received is this. Or in other words, this. So what I need to establish from the statement of cash flow is how much did I receive from cash? Now, when I start with the profit after tax of my business, if I go and say this is the amount of cash I received, no, that's wrong. So what do I need to do? I need to eliminate this from my profit. Then automatically, this amount will come in. This amount will come in. Right? So what you need to do is you have to add, when it is a profit, you will have to take out from the profit after tax. If it's a loss, you have to add it back. Why? Because of this profit, your profit is overstated. So I need to bring down. If there was a loss of 20,000, then your profit is understated. So I need to bring it up. Okay. So that is all about the adjustments that you do. Then already we have discussed the increases and decreases in assets and liabilities, how to capture those. Right. So I think we did a quick recap of statement of cash flows. And also I did a theory part also where we talked about what is cash and cash equivalent, and what is demand deposits, and short-term investment is what, right? And how this bank account can behave when it is a credit balance and a debit balance. I hope all those are in your memory, right? You can recall those. Right. Now let's get on to the business. Can you all see the presentation? Is it visible?
Yes, sir.
Right. So we are going to look at September 2017. I don't know how many of you have the paper, but just let us go through it, right? Right. Just see what they have given. If not, you can do a screen capture. You can take a photograph or maybe say do a print screen or whatever. And you can keep it for reference for the time being. Right? So what do they say? Based on the following statement of financial position of Neptune Finance PLC for the financial years ended 31st March 2017 and 31st March 2016. Answer the questions below. Right? Now this is a very simple balance sheet. Okay? So you can see that there are assets, there is capital or equity, and there are liabilities. Right? But there are no distinction between what is current asset, current liability. Those distinctions are not there. Right? It is up to you to decide what to be classified as current asset or current liability, whatever. Right? Have you all captured the screen? Or if you have the paper, you can take out the paper. Right? Now let's look at the question. Right. Look at the questions. Just go through the questions for yourself. Now, when you look at this question, without even knowing fully about how to prepare a cash flow statement, you can easily score 15 marks, isn't it? What do you think? What do you think? You can easily score 15 marks by answering the first 3 parts of this question. You don't have to worry about anything else. Even if you don't answer the last part, which might cost you around 5 marks, but even that for you can make an attempt. But knowing the theory is very, very important. You see, the first 3 parts of the question are all in theory. So you can easily score 15 marks. I mean, if you answer properly, you can score 15 marks without any problem. Okay. So don't think that statement of cash flow is a tough question, I should not look at it. Don't leave it as an option, because knowing the theory also it can help you in the examination, right? Okay, let's look at one by one. So this is the information that they have given, but the question that they are asking is, look, first 3 questions is nothing. It's only theory. Only the last part is what you have to worry about. Right. Let's see. Outline 3 purposes of preparing the cash flow statement. Outline 3 purposes of preparing the cash flow statement. So they want you to understand and write what could be 3 purposes. You can talk about more and more, but let's stick to 3 purposes of preparing the cash flow statement. What do you think? What do you think? Three purposes. Yes. Any answers?
To identify cash inflows and cash outflows of the business.
Yes, yes. So I explained this all. What is the main requirement? So you can take down, if you have to identify the different sources from which the business has received cash inflows and outflows. Right? Then second one, it helps the management as a control measure to manage the cash position. Number 3, to provide required information to the stakeholders. So you know who are stakeholders are, right? So to provide information to the stakeholders, right? That is enough. Just 3 simple purposes. Right. Next question. Explain why, having earned a profit from 31st March 2016 to 31st March 2017, the company's cash balances has been declined. Now let us look at this, where you see there is an increase in retained profit. You see, from 3,000 it has gone up to 5,000, the retained profit. So which means the company has earned a profit, and after paying out whatever they have, their retained profits have grown. But you look at the cash position. Cash has reduced from 2,000 to 1,000. Now what does that mean? What does that mean? Now that is what they are asking. Explain why, having earned a profit from 16 to 17, the company's cash balances has declined. Yes, you tell me the reasons. Do you have it? The reasons are on screen now. What does it say? What does it say? It says cash flow is more comprehensive than profit, which is dependent on accounting conventions and concepts. I explained this to you. When you are arriving at your profit, you make a lot of assumptions. You apply a lot of concepts like the accrual concept, matching concept. So what happens? The profit or loss of your business have a lot of elements which are based on principles and assumptions. But when you look at cash flows, it is purely the cash inflow and outflow. It doesn't have any assumptions like the accounting conventions, principles, nothing is there. So the profit that we are talking about has so many other elements which are contributing to the profit, like non-cash elements, where I explained to you earlier. Non-cash elements are impacting the profit of the business. But when it comes to the cash flow, it is not the case. That is why, even though they have earned a profit, their cash flows are different to what the profit that they have earned. Right? So you need to write it in your own words. But that is the essence of the answer. You have to say that the profit is purely based on some other elements, but the cash flow is not. Right? So let's write the answer. The profit of the business, the profits of the business is calculated based on various assumptions various assumptions and principles. Right? Within brackets, you can say example, accrual concept. Accrual concept. Therefore, the profit does not consider whether income is received in cash, or expenses are paid in cash. So you don't talk about the income, whether it is received in cash or not. Similarly, you don't talk about the expenses, whether it is received in cash, paid in cash or not. As a result, next point. As a result, the profit earned by a company does not correspond to its cash balance. Right? So that's the answer for the question. Right? So whether the profit increase or decrease, it doesn't matter, because it doesn't capture the cash receipts and payments, because it is purely on the basis of accrual concept. Right? Because what you look at is income earned and expenses incurred. I have told you several times. Income earned and expenses incurred. Whether income is received in cash or expenses are paid in cash is not relevant. That is what accrual concept is. Right? Okay. Third part, they are asking, what are the 3 categories of cash flow activities presented in the cash flow statement? Provide an example for each category. So I think I have given more than enough for you. Right? So you have to first say what is operating and what is, I think that definition is here. Operating, investing, financing, the activities are defined here. And then I have given examples here. You can pick one. Right? There are more. You can pick one and write. Right? I have given many examples. You can pick one of those and write. Okay. So let's look at the last part. This is where the important part is. Prepare the cash flow statement of Neptune Finance PLC for the year ended as at 31st March 2017. Right? Okay. Now, the first question that we need to ask, when you are to prepare a statement of cash flow, you need few things. One is you need to have a P&L or statement of comprehensive income. Or in other words, you need to have a P&L and you need to have a balance sheet or a statement of financial position for 2 consecutive financial years. And also, you might need some additional information depending on the question. So these are the basic requirements I told you. When you are to prepare a statement of cash flow under the indirect method, what we need to consider is there should be a P&L, there should be a balance sheet, and there should be a balance sheet, of course, for 2 consecutive years, and also additional information. But when it comes to this particular question, the examiner has been very, very clever to make it by giving only a balance sheet. 2 consecutive year balance sheets, they are requesting you to prepare a cash flow. So, if you have understood the essence of statement of cash flow, what does it mean? It is very straightforward. What you are required to do is to prepare a statement of cash flow using 2 balance sheets. So, look at here, the cash flow position has from 2000, it has come down to 1000. Right? So this is the opening balance, this is the closing balance, and during the year, what has happened? Is there a cash outflow or inflow? What do you think? During the year, the overall position, whether there is a cash inflow or outflow. There is an outflow. Why? Because initially they had 2000. 1000 has gone out. That is why it has come to 1000. Do you all understand that? From 2016 end, it is 2000 rupees. But when it comes to 31/3/2017, it has come down. Come down means cash position has reduced. Why it has reduced? Because there is more cash has gone out. Now they want is, how did this happen? What are the reasons? You need to capture these reasons by looking into the items that are given in the financial statement. Okay, so I would like to I need to do it on the board, so I would like you all to capture this as an image, otherwise I won't be able to look at the question and do it on the board. If you have the paper, no issue. Right? So, first thing what you have to do is, just in your books, right? What you need to do is, you need to look at the cash flows of all these elements, right? Whether it is inflow or outflow. So, on the side of this, or if you are thinking that you have a question paper, let's assume that you have this question paper. If you don't have the paper, just mark these items, cash balance, debtors and all, and you just put down the cash inflow outflow, net of this. So what do you mean by net? You have to look at what has happened to these items. So here from 16 to 17, cash has come down. So there is a cash outflow of minus 1000. Right? In the next item, debtors from 2500, it has come down to 2000. What has happened now? Inflow or outflow? What is it? Cash inflow or outflow?
Outflow.
It's a
Cash inflow.
inflow.
Cash inflow.
You need to stick to the basics. What is the basic? Any reduction in any reduction in asset is a cash inflow. I told you. Any reduction in asset is a cash inflow. Any increase in liabilities is a cash inflow. Right? So on that basis, quickly mark all these, whether it is cash inflow or outflow. I'll give you 2 minutes. What can you say about depreciation? What can you say about the depreciation?
Inflow.
Now, the depreciation is, I told you that it is not a, we don't consider it as an asset or liability for the purpose of cash flow. What should happen? It is
an
a
adjustment.
book entry which has to be adjusted. Okay. So, last year it was 500. This year it has been grown to 800. Now, what do you mean by that? Last year the accumulated depreciation is 500. This year it is 800. So, what do you mean by that?
Increase in depreciation.
How much?
300.
Yes. So, what has happened? This company has provided depreciation during the year for 300 rupees. Okay. So, there is a depreciation of 300 rupees for the current year. Now, that you have to go and adjust it in the profits. In the profits. Okay. That is what you need to do. That is what you need to do. Right. Now, let's see how we can do this question. Right. So, I'm now going to go to the board. So, I might have to remove this. So, you can look at your question from the picture you have taken or from the question paper that you have. Okay. Right. Now, let's look at how to do the statement of cash flows. Right. First thing what you have to do is you have to put the company name, like what we did for statement of comprehensive income and the other one, right? So normally what you need to do is you have to take a double spread, and in the double spread you can mark these items on the 2 pages. But here, of course, I think it is a very small question. So even in 1 page you can do it, right? So first you have to say Neptune. Neptune is the name, right? Yeah, Neptune Finance PLC. Company name. Then you have to give the name of the statement. So how do you call it? Statement of cash flows. Statement of cash flows. Then thirdly, you have to write for which period or which date, whatever. So statement of cash flows is prepared for a particular period, that is a financial year, like the P&L. So you can say for the year ended 31/3/2017, right? And then I draw the. So I think we don't need to have two columns here. We can do it with one column, and you will put the currency here. Rupees. Okay. So what you have to remember is the structure of the statement of cash flow. The structure of the statement of cash flow. So I think I have given you the format for an indirect method. The pro forma template was given. You can refer to that. And that you will see you have cash flows being classified into, categorized into three categories: operating, investing, and financing. Operating, investing, and financing. Right? Those are the three activities, types of activities. So let's start with cash flows. So I hope you are doing with me. Don't just wait looking at the screen. If you don't write it, it won't get practiced. So cash flows from operating activities. Cash flows from operating activities. Right, where do we start? We have to start with the profit for the year. So what is the profit for the year? Tell me. What is the profit for the year? I of course can't go to the question paper again because I'm doing it on the board. So you have to look at the paper and say, how much?
2,000.
2,000, yes. Because last year, I think it was how much? Yeah, it is 3,000 has grown to 5,000. So which means it is a 2,000 profit. 2,000 profit. Right, 2,000 profit. Then, are there any adjustments? Are there any adjustments that I need to make?
Yes.
What is the adjustment?
Depreciation.
Depreciation. Very good. So add, sorry, add the depreciation. So how much is the depreciation?
300.
300. Now depreciation, what happens at the time of providing depreciation? You will debit your P&L and credit accumulated depreciation. So as a result, your profit is understated. Now I have to bring it to normal. So I will add the 300. Add the 300. Okay. Right. So I think since they have given only the balance sheet, this is the only adjustment that I can do. Other than that, there are no other adjustments. Then what I need to move in? I need to look at changes in, I am using different colors to say the captions, but in examination you have to write it with one color, right? Changes in, this is like the subheading of cash flow from operating activities. Changes in operating assets and liabilities. Now this is where you capture the changes in working capital. Working capital, you can call it as changes in working capital also. Changes in working capital. You can call it like that also. Right. Now you are going to tell me how the changes have taken place in current assets and current liabilities. So for that, first you have to identify the current assets and current liabilities. What are the current assets? What are the current assets? Let's go one by one. What? Yes?
Cash balance.
Debtors. What has happened to debtors? Debtors have
Decrease.
reduced. So decrease in debtors. When the debtors come down, cash inflow or outflow?
Inflow.
Inflow.
So that is a 500 inflow. That is a 500 inflow. Right? So you have to take the difference between the two balance sheets. Then the next one. So whatever the items that we take, we have to mark off those. Then inventory. By the way, we don't consider the cash position here because that is our objective. Right? We don't touch the cash. Right? So debtors is done, then inventory. What has happened to inventory?
Decreased.
Pardon? Inventory has
Decreased.
decreased. So if it is decreased, cash inflow or outflow?
Cash
Inflow.
inflow.
Inflow. Decrease in inventory. How much is that? How much is that?
1,200.
1,200. 1,200. Because 2,000 and this year it was only 800. Then the next item, investments, it should not be part of operating assets or current assets. Property, plant and equipment also, you know that it is not part of current assets, right? That is done. Then you go to capital and reserves, that is not part of the operating or investing, it has to be financing, so that also we leave. Then we go to the liabilities. So under the liabilities, you have debentures. I told you that is a long-term liability. Then you have the bank loan. So bank loan is also a long-term liability. What is remaining as current liability? The creditors, the creditors. So what has happened to creditors?
Decreased.
What do you mean by that?
Cash inflow.
Cash inflow.
Cash outflow.
Sorry, cash
Cash
outflow.
outflow. Outflow.
Cash outflow. So when there is a decrease in liability, it's a cash outflow. How much is that cash outflow? 3,000.
3,000.
Yeah, 3,000. So you have to remember, now when you are saying decrease in assets is a cash inflow, obviously decrease in creditors, which is a liability, has to be a cash outflow. Okay, so that is what you have to remember. Right. So that is all about operating activities, right? So let's now total this. 2000, 3200. When you remove 3000, it is 200, 800, sorry, 500, 500, 1000, I think. Is it 1000? Correct? Yeah, 18,000. So this 1000 is called net cash, right? Now this is the inflow outflow. It's a positive number, so it's a inflow. Net cash inflow from operating activities. Net cash inflow from operating activities. Is that understood? Right? Then the next topic is cash flows from investing activities. Investing activities. So you know now what are the investing activities, right? So investing activities are whatever that has happened or changes in the long-term assets that you have. Long-term assets, right? So what are the long-term assets now remaining? What are the long-term assets remaining?
Investments and property, plant, and equipment.
Yeah. So you have to say what has happened to those two, right? So investments, it has increased, isn't it? Increase in investments. So when it is an increase, cash inflow, outflow?
Cash outflow.
Cash outflow. So that will be 3000 cash outflow. Then the next one, the only item remaining there, property, plant and equipment. Increase in PPE. Again, that is also 3000. So you have net cash. It's all negative. So net cash outflow from investing activities. Okay. Now we come to the last one. Cash flows from financing activities. Okay. What are the things remaining? First, we have to look at what has happened to my capital, or in other words, equity. So what has happened to equity? Capital employed. Earlier it was 4,000. This year 6,000. Oh, what has happened? What has happened?
Increased.
So which means they have issued shares and money has come. So there is a cash inflow. There is a cash inflow. So let's say increase in capital. How much is that? 6,000. Now last year 4,000 means I have 2,000. 2,000. Right? Then what are the remaining long-term liabilities? Long-term liabilities, because I told you financing also includes long-term liabilities. So debentures, there is no change. Did you observe that? Under debentures, there is no change. But when it comes to bank loan, it has increased. So there is an increase of increase of 2,000 there. Increase of 2,000. So that is net cash flow, cash inflow actually, net cash inflow from financing activities. You all have to write it. So we have 4,000 there. So ultimately, if you see here, 1,000 cash inflow, 6,000 cash outflow, 4,000 cash inflow. Right? So ultimately, what has happened? 1,000 plus 4,000 is 5,000. Minus 6,000 means there is a 1,000 cash outflow. 1,000 cash outflow. So net cash, you can say, you can, for safety, you can put both inflow, outflow for the year will be 1,000 negative. Okay. Cash flow from operating activities, cash flow from investing, cash flow from financing. So when we add all three, you have 1,000 negative. Now this is what we were trying to establish. This is what my answer was. Right? Now to complete the statement of cash flow, now I need to bring in my cash balance also. So how do I bring it? I have to say cash balance. We normally say cash and cash equivalent. Cash and cash equivalent at the beginning of the period. That is how we say that. Right? But you can say cash balance as at beginning. So, but in the beginning of the year, 1/4/2017 or 2000. Sorry, 1/4/2016. That is the beginning of the year. So it is 2000. So when you add the 2000 plus 1000, you get the 1000. What is that 1000? That is the cash balance as at 31/3/2017. So this is what the statement of cash flow is. Statement of cash flow is. Okay. Any questions? Any questions on this? No questions. So which means you have understood. Right. So this is September 2017. Now the next one is March 2019. I think that paper is already uploaded. You have it in the portal. So I don't know whether you have downloaded it or maybe say you have printed it. March 2019, question number 4. Right. So they have given us some details. Okay. The following information is available from the books of Niagara Trading Limited. Now this is for a company for the year ended 31st December 2018. So they are talking about a financial year ending 2018. Right. Now let's go to the questions first before answering, looking at the table. Look at the questions. So here also you will see the first two parts of the question are theory. The first two sections of the questions are theory. Easily you can score 10 marks. Explain 3 types of cash flows presenting in the statement of cash flow with one example each. That is same as what we did for March 2017 or September 2017. Same question. Second part, what is the applicability of accrual accounting concept for the preparation of statement of cash flow? Same thing. Now earlier I explained to you. Accrual concept is based on the principle that it is based on the income earned and expenses incurred, not on the basis of whether the revenue is received in cash or the expenses are paid in cash. as a result, the profit that we are, the accounting profit that we are realizing is based on several assumptions, such as the accrual concept, right? But when you look at the cash flow, it is not considering any of these factors, right? So application of the accrual accounting concept is applicable for the profitability, but not for the statement of cash flows. It doesn't apply for the statement of cash flows, right? Then they say prepare the statement of cash flows for Niagara Trading Limited for the year ended 31st December 2018. So that is what they want us to do using this information. Now tell me, as I told you earlier, there should be a P&L and a balance sheet of 2 years to prepare a statement of cash flow. But what is this now? You have some piece of information. There is no P&L, there is no balance sheets. So what is this piece of information? Anyone? Any idea what this information is? No idea. So this is what I was talking about, extracting the real actual cash receipts and cash payments from your ledger. What they have done is something similar to that. Taking into consideration of the actual receipts and actual payments, they have extracted some information for you. So here, the cash flow is to be prepared based on direct method. It is not indirect method. If you are to do a cash flow statement from indirect method, then you need to have the P&L, balance sheet, everything has to be there, like what we did earlier. But here, both of them are missing. So if it is missing, what does it mean? This is something to do with the direct method. Direct method. But again, it will be under the same format, like the operating cash flows, investing cash flows, financing cash flows. That won't differ. But the difference here is whether there are P&L balance sheet given or actual cash receipts and payments are given. Right. Now, from the list of items, you need to identify what are the elements that are going to have an impact on my cash flow. Right? And also, you need to see whether it will be a cash inflow or an outflow. Quickly, I'll give you 1 minute. There are only few items, no, 3, 6, 9, only 12 items. So from the 12 items, you need to capture what are the items that needs to go into the cash flow under operating or investing or financing, and then whether it is a cash inflow or outflow. That is what you have to identify quickly. Right. So in the examination, when you are doing a cash flow question, right? Now this is how you should do. I hope you can see the board. Is it visible? Can you see the board?
Yes. Yes, sir.
Right. Now this is your double spread page, right? Answer book. Okay. So what you can do is like when we did the P&L balance sheet and the statement of cash flows, if you can recall, we use the double spread. Likewise, here also you can do. So at the top you put the company name, statement of cash flows for the year ended, blah 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 everything, and then you start the format. What you do, you take a 2-column concept actually. You can do a 2-column. I have written it in short form, but you have to write it in full in examination. So first caption, cash flow from operating activities. I leave about 5 or 6 lines and then put cash flows from investing activities. So like half you can keep. Then go to the next side, cash flows from financing activities. Leave about half a space and then you can write down all these. Net cash flow for the year, cash and cash equivalent for the year at the beginning of the year, cash and cash equivalent at the end of the year. This is the objective, right? So what do you mean by that? You can take it from the balance sheet or the piece of information given to you. What is the closing balance? Then from the balance sheet or the information given, what is the opening balance of cash? So in order to achieve this cash position from this position, what should be my cash outflow or inflow? So we can put down those numbers first and then we go and fill in this. So now refer to this question and pick these elements. Now if you refer to this question, actually they are not requesting you to go to the extent of the cash position. They are just stopping at a level which is before this, right? So they are stopping here. They have not gone to this level. That piece of information is not given. You can read through the question, right? So in examination, what you need to do is you need to fill in these also. In the earlier question, if you look at it, we did the same thing. Cash balance at the beginning of the year, cash balance at the end of the year. Right here, this part will not be required, but this is the standard template. So you can, if you want, you can have a screenshot or a photograph taken to remember what you should do. Okay, right. Now pick the items from the list and put it in the correct place. Pick the items from the list and put it in the right place. First one. What are the items? First item, cash sales in 2018. What you can say? Where does it go? Where does it go? Here or here or here? Cash sales, cash sales. So you have done some cash sales and you have received money. So that is your operating activity. Cash sales, cash sales. So that is 1 million. Okay, 1 million. Then they have given payment to creditors. Payment to creditors. What is the category?
Operating activities.
Operating activities. Payments to creditors. Inflow or outflow? Inflow or outflow?
Outflow.
Outflow. It's an outflow. It's an outflow. Third one. Collections from debtors. Collections from debtors. Again,
Operating activity.
operating activities. So you have collected money from your debtors. That is again a cash inflow. Cash inflow. So take a note of what I am doing. I am writing it in the first column. So I'll take the total into the second column. Then rent paid. Rent paid. What do you think?
Operating activity.
Operating activities, because in order to run this business, I need to make a rent. So rent paid. And it will be a cash outflow. Cash outflow, 200,000. Right, 200,000. Then the next item. What is the next item? Share issues.
Financing activity.
They say proceeds from share issue. Proceeds from share issue. So where does it go?
Financing activity.
Financing activities. Very good. So I'm not going here. Proceeds from share issue. Cash inflow, outflow. That is a cash
Inflow.
inflow. Cash inflow. 2 million. 2 million. Next one. Electricity payable. Electricity payable. What do you think? Electricity payable.
It's
So operating income.
not considered.
It should be considered or not?
Not. It's not
It should
considered.
not be considered because it's only a liability. But there is no corresponding liability given to the prior year. So I don't know. What I need to look at is whatever the direct receipts of cash and payments of cash. See what I have considered? I have considered rent paid. If this was rent payable, I wouldn't have considered. Payable means something that I have done using the accrual concept. But here, I am worried only about the actual receipts and payments. So electricity payable will not come. Electricity payable will not come. Please make a note of it. Then the next item, equipment purchased. What is it?
Investing activity.
Investing activity. Very good. Equipment purchase. Inflow or outflow? It's a
Outflow.
outflow. Anything that you purchase will require cash to go out. So cash outflow. Look at the next one. Telephone bills paid in 2017. Where does it go?
It's not considered because it's in previous year.
Very good. We should not consider because we are talking about 31st December 2018. That is from 1/1/2018 to 31st December 2018. But here comes, they are giving you an information relating to 2017. So I am preparing the cash flow for the current year, but they are talking about the previous year. So you have to be very careful. In examination, the examiner is very clever in confusing the candidates. So here comes an element of information is given to you where it is not applicable for this question. So you have to be very clear with what you are doing. That is why every piece of information is important for me. Some candidates, what they do, since they see that it is telephone bills paid, yes, it is paid. It is paid in cash. But when? It is in 2017. I am preparing this cash flow for the year 2018. So this particular piece of information is not relevant for me, or not relevant for me. Then the next one, dividends declared in 2018 but not yet paid. What do you do?
It's not considered.
What do you do? It's not considered, because if you have not paid, why should I be worried? Isn't it? If you have not paid, why should I be worried? That's not relevant to me. But look at the next one. Dividends declared in 2017 and paid in 2018. What do you do with that?
It's coming under financing activity.
Yes, I told you, anything to do with the shareholders or issuing shares, dividend payments, everything is under financing activity. But the problem here is they say dividends declared in 2017. So based on the 2017 profits, they have declared, okay, we are going to pay a dividend. But for the purpose of cash flow, what we have to think is, when are they paying? So they have paid it in 2018. As a result, it is relevant to me. Okay. Now, what happens in the earlier case? You say that telephone bills paid in 2017, you ignore it. But here you can't take it in the same line. That is where the examiner is again very clever. Dividends declared in 2017, but it is paid in 2018. So I need to consider that. That is coming under financing activities. Dividends declared in 2017 and paid in 2018. How much is that? 150,000, and that is a cash outflow. Cash outflow. And the next one, proceeds from disposal of machinery. Proceeds from disposal of machinery. So they had some machinery, they have sold it. Now, when you sell a machinery or fixed asset, I told you, can you remember that example? What is important for me is not the profit or loss, but how much did I receive from the disposal. Now here they have given straight away profit from proceeds from disposal is 300,000. So what type of activity is? It is
Investing.
Investing.
proceeds from disposal of machinery. That's a cash inflow. And the last part, they say loan application submitted for bank borrowing. Loan application submitted for bank borrowing 1 million. What do you do? What do you do? What do you do?
It's not considered.
Why? Why is that?
Will not receive the
Very
borrowing.
good. Very good. That is what you have to. I mean, by reading this piece of information, you need to take into your mind, what should I do with this? Okay, right. Now, loan application submitted for bank borrowing. Yes, you may submit a bank loan application, but the bank has to decide whether to give it to you or not. Now, in this scenario, you have gone and submitted a loan application to the bank for 1 million, but bank has not yet decided to give you the loan. So it is not relevant for me. It is not relevant for me. Okay, right. So that is all about the piece of information given. I have captured everything. So now you take the totals. So here I say I just write it in line with this. Of course, you can use different color between black and blue, but no other colors. I'm just to differentiate it. I'm using different colors. So please mindful that. So what I will do is I will take the net cash flow into this column. So 1 million, I will have 500,000, 750. So I will have 550. Am I correct?
Yes, sir.
Yeah. Then here I will take again the net cash flow. You can simplify this. Don't try to write it in full net cash inflow, outflow, whatever. No, net cash flow. I don't mind. So here 1.5 million outflow, 300,000 inflow. So that will give me 1.2 million cash outflow. And here also net cash flow, that will be 1,850. Am I correct?
Yes, sir.
Right. Now you have to take the total. So 1.2 1,850 plus 550 is 2.4 million. 2.4 million minus 1.2 million is 1.2 million. Okay. So our answer stops here. I don't have to write this part in this question, but any other questions you might have to. So you have to be careful of what they request, because the opening cash, ending cash is not given to me. Okay. Right. That's a very comprehensive question. So the last part of the question where they say they want you to find out the profit on disposal of machinery. Profit on disposal of machinery. Can you do it? So you have the cost. You have the book value. And the accumulated depreciation is given to you. Right? So 500,000 is the cost. 300,000 is the depreciation. So net book value is 200,000. But you are selling it for how much? 300,000. You are selling it for 300,000. So you will have a profit of 100,000. You will have a profit of 100,000. That is the last part. Okay. Right. So you must be tired. Even I am also tired. So let's take a small break. Right. 15 minutes would do, right? Is that okay?
Okay, sir.
Right. We'll rejoin at now it's 11:05. So 11:20 we will rejoin. But I want you all to do a small part, which is, I think the 2021 paper is already loaded in the portal. So just have a look at it before you come at 11:20. Okay? Just have a look at the 2021 January paper cash flow question, which is question number 5. Just have a look at it. That is a very comprehensive question. Just have a look at it when we come back. Okay? Right. Let's have a short break. 11:20, I will come back. You have the 2021 paper, right? It's in the portal, right?
Yes, sir.
Okay. Right, we'll start the 2021 paper. So let's quickly go to the questions first. Right? Now this is the other piece of information. This is the question. So they are asking, write 3 advantages of preparing a statement of cash flow for Erica and company. So that is, you already know. Like, the question can come in any way. What is the purpose, or what is the advantage? So the answer will be the same. Right? So what is the advantage? You can identify the cash inflows and outflows. According to that, you can manage your cash position. Right? It can act as a measure for internal control. So you can write so many things in terms of whether it is purpose or advantage or whatever it is, the answer will be the same. Then they want you to prepare investments and fixed assets ledger account of Erica and Company Limited. Right now they want you to write up the T accounts. The T accounts for the cash flow. Not the cash flow, two accounts that they are talking about. Right? Now, you know how to draw up the T accounts. Okay? Right. Now, let's go and look at, now only we have to look at the piece of information. So, now you have a P&L and you have a balance sheet. So, when you are requested to write up the T account, what do you do? Using the piece of information given, right. Now, when you are requested to write up the T account, first you have to look at the balance sheet that is given. Now, look at the balance sheet and see. They want you to write up the investments account. And also the property, plant or fixed assets account. Right. Now, based on the information given to you in the question, you tell me how can we draw up the two accounts. Where can we start? Where can we start? So we have to start with the balances for the 2 years. So investment in 2018 it is 75,000, but when it comes to 2019 it has reached 95,000. So we say balance brought forward 75,000. Similarly, there is a balance carried forward 95,000. This is the first part that you do. From the balance sheets, the 2 balance sheets given, we have to write down the balance brought forward and balance carried forward. Right? So this is pertaining to the year 2019, this is pertaining to the 2018. So this will be your opening balance, this will be your closing balance. Similarly, what is it for fixed assets? Look at fixed assets. For 2018 it is 300,000, subsequently it is 450,000. So balance brought forward 300,000, then you will have the totals, then balance carried forward 450,000. Right. That is the information that we can pick from the balance sheet. That is from the balance sheet. Right. Now thereafter, what is the piece of information that we have? Let's look at the information given to us. Right. Read the information. What do they say? What do they say? So they have said investments and fixed assets are accounted at cost. Investments and fixed assets are accounted at cost. Right? Then, so which means there is no depreciation in fixed assets. There is no any impairment or anything in the investments. That is what they say. Then they say investments that were originally cost at 30,000 were divested for 47,500 in December 2018 for cash. Now, what do you mean by that? Can somebody explain me what it is? Investments that were originally cost at 30,000 were divested for 47,500. What do you mean by that? Anyone? Yes, what it is? What has happened? Everybody has gone silent. You don't want the class? Are we in the class? what do you mean by investments that were originally costed 30,000 were divested means? Divested means it is disposed. I have sold the investments. I have sold the investments, then it will be for 47,500. So something that you bought for 30,000 is now sold for 47,500. So what do you get from there? What do you get from there?
A profit.
How much?
15,000.
How come 15,000? You have originally had it for 30,000. Now you are selling it for 47,500. So how much is the profit?
17,500.
17,500. So do you see that 17,500 somewhere? Do you have it somewhere?
Yes.
Where is it? You can see the presentation, right?
Gain on
Percent of
deposit.
Statement of comprehensive income.
What is it? I didn't get.
Gain on disposal of investments.
Look at the statement of comprehensive income. Look at the statement of comprehensive income. There you get at gain on disposal of investment 17,500. You see? So when you are to prepare the statement of cash flow, you will take the profit after tax or profit before tax. Let's say profit after tax. So when you take this 152,000, this is included there. So what did he say? Under adjustments, we need to remove this. This 152 has come because of this 17,500 is included there. But we said this has to be removed and then you need to bring in the 47,500. Okay. So you have to be very careful in the adjustments that you do and what you bring in. What you bring in. So when you divest, what happens? We'll go to the T account. When you divest, the investment will go out. So how much is it? It will be 30,000. 30,000. 30,000. Okay. 30,000. So that is gone out for 30,000. Now let's try to balance this account. 120. Sorry, we haven't gone through the remaining items. Let's go through the information given, then we'll come to the balancing of the account. Right. Then next part. In February 2019, Erica and Company Limited made some investments and purchased some fixed asset in cash. Now during the year, what they have done? They have purchased some new fixed assets and they have also made some investment. Now in both these cases, what will happen? Cash will go out. Cash will go out. So why are they giving this information? Why are they giving this information? For you to identify and find out what is the amount of investments that they have made and also how much of fixed assets they have purchased. Okay? That is why they are giving that. Then they are saying dividends amounting to 8,000, which were declared in March 2018, were paid to shareholders in February. So 2018 related dividend that they declared, they have paid in 2019. Dividends amounting to 10,000 approved at the annual general meeting held in March 2019. So now we are talking about 2 financial years. Whatever that was approved in 2018 has been paid in 2019. But what has been declared and approved in the 2019, what will happen? It will get paid later on. So what they say is dividends amounting to 10,000 approved at the annual general meeting held. That information is not relevant to us because that doesn't have any cash impact. That doesn't have any cash impact. Is that understood? Right? So now let's look at balancing the account. Balancing the account. Right. So now opening balance 75,000, closing balance 95,000. During the year they have done some divestment. So when they do that divestment, what will happen? Investment credit 30,000, cash 47,500, and there was a profit of 17,500. That is how it happens. So as a result, what will happen now when you balance it? 125, 125. So there will be a balancing figure of 50,000 here. Now what is that 50,000? That is the new investment. You debit here, credit cash. You debit here, credit cash. That is how the cash will go out from the business. Cash will go out from the business. Okay. Then we will balance the fixed assets. So there are no more transactions and they have said the fixed assets are maintained at cost. So you can balance it. 450 here, 450, and again there is a balancing figure of 150,000 here. Now what is this? This is new fixed assets purchased. So debit here, credit cash. Debit here, credit cash. Your cash will go out of the business. Your cash will go out of the business. So these are the two elements that you need to find out. And where will these two go? In the statement of cash flow? Where will it go? Any idea?
Investment.
Where is it? In the cash flow statement, under which category it will go?
Investment activities.
Investment activities, because both these are involving investments. So you have to be very careful. Now, when you are taking the information from the balance sheet, when you come to investment and fixed assets, whatever that is given there is not relevant. Now we have found out the cash impact. Debit here, credit cash. Debit here, credit cash. So this is what we need to take to the cash flow statement. Cash flow statement. Right. So now what I'm going to do is, I'm not going to do this question. I'm not going to do this question. Right. I hope all of you are good in Excel. You know what is Excel is? Microsoft Excel. Okay. Right. So I want all of you to do this question in Excel. Right. Do this question in Excel and email it to me to this address. Please take down my email address. It's KAMALESH at combank, COMBANK.net. Okay. So you are going to do the question in Excel and forward me it to the above email address. Is that okay? Can you all do it? Right? If you are unable to do it in Excel, you don't need to worry. Do it in a piece of paper and email it to me. Take a photograph and email it to me. Don't worry. Right? I just said to do it in Excel because it will be easy for you. So if you don't know or you can't, just do it on a piece of paper. Take a photograph. You can send me a WhatsApp or this, where I will mark it and respond to you. Wherever corrections are required, I will mark it and send it to you. Why I told you to do it in Excel is it is because you can easily practice it. Just do this cash flow template, save it. Then when you are doing the revision work, you can just go and put the numbers with the text and do the questions over and over again. Right? So just have it, do that part and email it to me, or you can send me a WhatsApp. Right? Agreed? I'm not getting any responses. Can you all do it?
Okay, sir.
Right. So if you want to see whether you have done it correctly, please do so. Email it to me so that I will look at it and will respond to you. If it's an email, I would prefer, because I can then respond by typing, saying whatever the corrections that you need to do. In WhatsApp, it might be somewhat little difficult, but it's okay. Those who are unable to send me an email, just send it to me via WhatsApp. Okay, right. So that is all about cash flow. That is all about cash flow. Now, what we are going to do is right. So we are going to do something different. Hope everybody can see the screen, right? You can?
Yes, sir.
Right. So before we wind up, we are going to look at another area. I just want you to look at few things before you prepare yourself for the examination, because these things you might not do it when at the examination hall mostly. So that's why I'm trying to enlighten you on those areas, right? Now, when you open a question paper, there are certain instructions given to you. Generally, what candidates do is they don't go through this because they hardly have time. So they don't go through it. But at least beforehand to the examination, you need to go through it. Okay? You need to know what are the instructions given to the candidates. So that will help you how it is given. Right? Mostly what will happen is, these are some basic ones. But what is more important is, your paper will consist of 8 questions. Out of the 8 questions, question number 1 will be compulsory. So before you start doing the paper, just have a look at the question on these instructions to see which question is compulsory. That is very important. You need to understand which question is compulsory, right? Then you also need to establish whether there is a multiple choice question or not. That will help you to understand the choice of your questions, as I told you before. When you establish those, you need to understand the requirement. So there is one compulsory question, then you have 4 other optional questions that you need to answer. So that is where your choice becomes very important. Which 4 questions that I do? And you need to be mindful that each of these 4 questions that you select will have 4 subsections, each carrying 5 marks. That is how the entire 100 marks is made up, right? Then, very importantly, you have to provide precise and direct answers. You can't be writing pages and pages to explain something. It won't help you. The examiner will not be very keen to look at your answers for pages and pages. Even writing half a page, sorry, or 10 lines would be sufficient if you are writing it directly to the point. Okay, don't expect to write pages and pages for small explanations that you need to provide. Right, that is what it says. Long detail or essay type answers are not expected. It is also required that you need to show your workings for all the answers, and that needs to be in your answer book. You can't write it on the question paper and or maybe some other piece of paper that you may have and attach it to the answer book. You can't do that. There had been instances, because why I am telling all this is these are some mistakes that the candidates do. There had been instances where candidates have done the MCQ question on the question paper itself and they have attached the question paper to your answer book. So they would have lost the marks because you are not in a position to read the instructions and answer accordingly. So why an answer book is given? Because you need to put your answers on the answer book. Question paper has to be something that you can take back home, not to be given along with the answer book. So don't ever do it. MCQs have to be answered on the answer book itself. And of course, what type of calculators you can take is all very simple, but mostly I would recommend you take, no need for a scientific calculator, which might be very complicated in your examination. I hope you would have seen the numeric calculators which have large buttons. Preferably you might have seen in office, but don't take that. Borrow or get some from somewhere. The calculators which have larger buttons, because in examination with the pressure, sometimes these numbers you might go and type wrong numbers, right? So when you are totaling up, so better have a calculator of that type, right? And as I told you, always start with a new page for each question, because there are candidates who write every question, try to answer the question within the another question. So don't do it. If you don't have enough answer book to write, then you borrow another answer book from the invigilator. Attach 2 answer books, no problem. But don't try to put everything in one page or continue with the previous page. Don't do it. Answer every question on a fresh page. And on the first page, the cover page, you have to say what are the questions that you have answered. So that will give you an idea to the examiner what are the questions that you have attempted or answered. Okay, right. That is all about the instruction. Then prior to the examination, if you have time, I think you have enough and more time now, since the exam date is not yet scheduled with this COVID pandemic. At least start now itself to do an analysis of the past papers. If you can have the past papers, just do an analysis of the past papers. What type of an analysis you can do is, now we have learned around 14 to 15 topics, I think, right? I have captioned each topic under separate captions. So you can do an analysis like this. Okay, I have captured up to September 2019, but I have not done it for January 2021. This is something which I did based on what I teach. Okay, how the questions have come in the past based on the subject component, right? Say, for example, categories of accounting, process of accounting, users of accounting information, principles or assumptions and concepts of accounting, business entity forms and types. So various sections. Starting from 2015 September, I have analyzed which question, which part, how it has come. Like the counting principles, double entry system, the recording process, journals and journal types, trial balance, accounting cycle, then books of original entry and ledgers, errors, suspense accounts and control accounts, bank reconciliation, property, plant and equipment, LKS1, financial instruments, statement of cash flows, financial ratios, investment property, regulations to banks, accounting standards, right? So you can do an analysis of your own analysis. This will help you to understand the pattern of questions being tested, how each and every paper is structured in a manner to test your knowledge, right? So you might see a pattern, like say, for example, here. You can understand this pattern, how the questions have been tested. Okay, so that is just to give you an idea. Based on our learnings, you prepare this chart. You don't need to do it for September 15 onwards, but you can do it for the past 5 papers from 2021 going backwards to March 2018. That would do, right? Doing about 5 papers in your own before the examination is more than enough, I would say, because that is what the current current accounting subject content is covered within the last 5 papers. Prior to that, as I told you, the accounting standard differences, everything will come in. So you can stick to the last 5 papers. Right. Now, let's look at how to answer the MCQs. Right. So I hope you have the January 2021 paper. And now I'm going to run through the MCQ paper on 2021. Are you all ready? Any questions? Right. So generally I recommend, if you get the MCQ question, start with that. That will be the easiest one for you to attempt. So what do you do when you open the answer book? First page, where you got to put the question number here. So generally it will be question number 2. So you can say question number 2. Then you have the lines here, right? In that, you have to put the question number as it is. That is, if it is Roman 1, you put Roman 1. Then Roman 2. Likewise, you have to put. Then the answer, right? Then the answer, right? Let's look at the first question and then I'll come to the answer, how you provide the answer. Right. What is the first question? Read the question. Which financial statement uses the expanded accounting equation? So now when you say that, you need to recall what is my expanded accounting equation. Can somebody tell me what is the expanded accounting equation quickly?
Assets plus expenses equals capital plus income plus liabilities.
Yeah, but we don't say assets plus expenses. Expenses has to go to the other side. Okay? So assets will be equivalent to liabilities plus capital plus income minus expenses minus dividends. Can you remember? So, where a statement which captures all the elements that you see. Which one? What is the answer? Which statement?
First one.
Whether it is A, B, C or D.
B.
Second one or fourth one? You said B or D?
B.
Right. The answer is statement of financial position. Right? So, now you need to know how do I answer. Right. So, I have put Roman 1 and my answer would be B. That's all. You should not be going and writing instead of this statement of financial position. Not required. Because the examiner know what it is. So simple, you write B. That's all. Okay. So please remember, why I am telling you all this is to ensure that you don't get confused when you go to the exam. You go with a clear mind. How to approach the exam. I need to save my time in the examination. So how can I save my time? All these will help you to save your time and manage your time. Okay? Is that understood? Right. Now we'll get on to the MCQs. So first question, which financial statement uses the expanded accounting equation? It is statement of financial position. Right? Second one, read the question. So what does it say? A repayment of loan of rupees 65,000 has been debited to the loan account maintained by Tulip Sole Traders. However, rupees 15,000 of this amount include the interest on the loan. What are the journal entries to correct this error? So, in the first place, you should understand whether there is an error. Now, they say no that there is an error. So, if you are to correct this error, what is the journal entry that you will pass? Which one is the answer? What do you think?
C.
Answer?
Third. C.
Third one. Debit interest on loan account and credit loan account by 15,000. Is that the answer?
Yes.
Right. Now you need to tell me why. Now, that is the answer actually. But you need to know why. Right? Now, when you have a loan account, how do we account for it? This is your loan account, which is for the capital. And you will have an interest account also, which we call it as interest receivable. Okay. So what they say is when you are recovering your loan, you have right? So interest receivable, we have to say interest. Right. So you are repaying a loan. When you are repaying a loan, what will happen? You have to now say you have a loan of 500 means you have to debit this account. Let's say you are paying 100 out of this. So it's a capital. Now what has happened here? You have gone and debited 115. Or in other words, this question, they say 65. Out of the 65, 50 is capital, 15 is interest. So you can't debit 65 here. The 15 interest, so go to interest paid. So only 15 can go to the capital account. That is why they are saying debit interest on loan account 15 and credit the loan account 15. So 65, when you credit 15, 50 will remain. You have already debited 65. Now you are correcting the error, so you credit 15. So automatically 50 will remain. And this 15 comes here. Okay? So you need to know how you arrive at the answer. Right? Okay. Next one. Right? A source document that you will use when preparing the cash book. Which one? Source document. a source document that will be used when preparing the cash book? Which one?
Purchasing list.
Now first you have to remember, you are going to update your cash book. For that, what would be the source document? So credit note is something where it is not at the time of preparing the cash book. It is something where at the time of you make a payment. So when you are required to make a payment, the creditor will send you a credit note. No, you don't need to pay me this much. You deduct this amount and pay me. That is what credit note is. Then look at what is check counterfoil. Check counterfoil is where you will give checks to your debtors or the creditors or whoever, and you will capture that information in your checkbook, the smaller part which is remaining in the cash checkbook. Now that piece of information is very important, because later on when the check is submitted for payment in the bank, you have to track it with that information. Okay, so check counterfoil is very important to prepare the cash book, to update the bank column, not the cash column, but the bank column. Let's look at C, sales order. Sales order is nothing to do with the cash book. Sales order is where you are placing an order for sales. Purchase invoice, it's just the invoice. For the invoice, you don't do anything. No, invoice will come into effect when you only make the payment. So the answer is check counterfoil. Check counterfoil. Okay. Next one. Read the question. During 2019, Daisy Furniture Company reported a turnover of 5 million and a cost of goods sold of 3 million on its income statement. So there had been a turnover of 5 million, cost of goods sold is 3 million. The company's opening and closing inventory was 500,000 and 750,000. Opening stock and closing stock. What is the inventory turnover ratio? This is something to do with the financial ratios. Can you quickly do it and tell me the answer? Of course, I have shown the answer. But you need to tell me how you got it.
4.8 times.
Yeah. How the answer? You got it.
Cost of goods sold divided by average stock.
Very good. So first you need to know how to calculate the inventory turnover ratio. That is cost of goods sold divided by the average stock. Right? So in examination, you don't need to write all these. Okay, you can just show the simple working and you can do it. So cost of goods sold is, I think, 3 million. Correct? Average stock will be, now they have not given you the average stock, but they have given you the opening stock and closing stock. So what do? You add the opening stock and closing stock and divide it by 2. Correct? Add the opening stock and closing stock and divide it by 2. This will give you 4.8. Is that correct?
Yeah.
Is that understood?
Yes, sir.
Yes, sir.
That is how you get 4.8. Right. Go to the next one. Which of the following contributes to classify a machinery as a finance lease? Right? So, leases are of 2 types, finance lease and operating lease. So, where the finance lease is basically talking about, now if you take a bank, when you offer a lease facility to one of your customers, right? Let's say you give a lease loan to a customer to purchase a vehicle. What do? Does anyone know how it happens? What is the arrangement with the bank? What will happen? When you are giving a leasing loan, leasing facility to one of your customers, what you will do is you will mortgage the vehicle to the bank. Okay? The customer has to purchase the vehicle and it will be mortgaged to the bank. So until the lease repayments are over, the vehicle ownership piece will be with the bank. It will be transferred only at the end of the lease period. Provided the customer settles the loan in full. Right? So they are asking, which of the following contributes to classify a machinery as a finance lease? So obviously, answer is the first one. Ownership of the leased machinery transfers to the lessee at the end of the lease term. Next one. Read the question. Violet Finance PLC measures its investments in shares of Poppy Company PLC at fair value. So now you have to recall whatever that you have learned under financial instrument, right? Now financial instruments can be classified into 3 categories. What are the 3 categories? What are the 3 categories? Financial instruments, what are the 3 categories? Come on. What are the 3 categories? Anyone? Fair value through P&L, fair value through OCI, and amortized cost. Have you forgotten? Am I correct? Fair value through profit or loss, fair value through other comprehensive income, and amortized cost. Right? And in these three categories, what are the measurement criteria available to us? What are the measurement criteria? Yes? What are the measurement criteria? One is you can measure it at fair value, or you have to measure it at amortized cost. You have to measure it at amortized cost. So what do you mean by amortized cost? What do you mean by amortized cost? Amortized cost is capital plus the accumulated interest or accrued interest. Then what is fair value? The value agreed between two parties, knowledgeable parties, at an arm's length transaction. So fair value is generally, in other words, we call it as the market value. Fair value is, in other words, called as the market value. Right? So these things you have to remember. Otherwise, it's very difficult for you to answer. Right? So you have to somehow make an effort to revise all your work and then start looking at the past papers. It's high time. Well, I don't know, very soon you might get the exam also. So better you start now itself to do the revision work and start doing the past papers. At least 5 past papers prior to the examination is very important. And that also you don't go and do start from 2015. You have to do the recent 5 papers. But if you have time and get the papers, better if you can do it till 2015, or maybe that is the new syllabus they are started. But only thing is some of the topics may not be relevant. So some questions you can do, right? Because as I told you, the financial instrument standard got revised in 2018. So prior to that, it will be previous standards. So leaving out those questions, you can do the remaining, whatever that is from the other areas like bank reconciliation, cash flow statement, or maybe say fixed assets, journals. There are a lot of other areas, so you can do that also. Right. So going back to this question, they say Violet Finance PLC measures its investments in shares of Property Company PLC. So both these companies, you see, it is PLC. When you say PLC, it is what? It is a public liability company, right? And they also go on to say that shares of Property Company PLC are listed and actively traded on the stock exchange. So the company where Violet Finance PLC has invested is a listed company in the stock exchange. So which means they are trading and their market prices will go up and down, right? They are subject to fluctuation. Select the correct valuation to be used. You see, select the correct valuation to be used by Violet Finance PLC to measure the shares in Property Company PLC for the year ended 31st March 2009. So now there is an instrument, financial instrument, that is being traded in the stock exchange, actively traded. Now you need to know under which category I will classify this. Whether it is fair value through P&L or fair value through OCI or amortized costs. So for this purpose, you need to know the evaluation criteria. What are the evaluation criteria? First is the SPPI test. So only the payment of principal and interest, whether this instrument has that. Then you also need to look at the business model. Right? Now that is the correct way of identifying the type of classification. Now, going into that level, you can simplify this question. How? Since the shares are listed in the Colombo or maybe the stock exchange, we know there is an active market for this. So the prices are subject to fluctuation. When the prices are subject to fluctuation means I have to take the market price of the share as at 31/3/2019. Simple as that. Right? If there is a share that is being traded in the stock exchange means you need to consider the market price of the share for valuation. So which one is the answer now? Now I have explained to a greater level. What is the answer now? Tell me. What should be the answer? What should be the answer? Yes? So you have to take the price of the share as at 31st March 2019. What is that? The closing price. The closing price of the share of Copy Company PLC on the stock market as at 31/3/2019. Is that clear? Is that understood? No response. What has happened? Did you all understand that?
Yes, sir.
Right. So you have to respond to me, otherwise I will not know whether you are listening or not. Right. Next one. The following information has been extracted from the books of Hanna Trading PLC for the year ended 31st December 2019. So they are giving a lot of information. Calculate Part A, cash received from debtors. Calculate cash paid to creditors. Quickly, you have to do it. They have given some piece of information for you to calculate the two figures, cash received from debtors and cash paid to creditors. Now this is the information when we did the prime entry books of original entry. So if you can recall that subject, you will know. This is where you need to do a lot of revision. Right. Look at the board. Based on the information I have populated, debtors, opening balance, closing balance. Creditors, opening balance, closing balance. Right? Now, using this only, we can find out what is the cash amount. Using this only, we can find out what is the cash amount. Right. First, they say sales on credit. Now, debtors will come into the picture when there is a credit sale only. If it is a cash sale, you will debit cash, credit sales. Now, when it is a credit sale only, you will debit debtors and credit sales. So, here they say that sales on credit was 500,000. So, debit debtors, credit sales. Then say purchases on credit. Similar to the sales, now purchases. So when it is a cash purchase, you know, debit purchases, credit cash. But this is a credit purchase. So you will debit purchases, credit creditors. $300,000. The remaining 4 items I have already taken. Debtors opening balance, debtors closing balance, creditors opening balance, and creditors closing balance. Right. Now they say bad debts written off. Bad debts written off during the year. What do you mean by that? During the year, they know that one of their debtors is not going to pay. So they have to remove it from the books. So they have debited bad debts and credited 5,000 here. Bad debts. Then the next item they say provision for doubtful debts for 2019 is 10,000. Now when I make a provision for doubtful debts, what do? I will debit the P&L for bad debts or doubtful debts, and I will credit the provision for bad and doubtful debts. So that has nothing to do with the debtors account. So it is not applicable. It is not applicable. Then the next item they say sales returns on cash terms. What do you mean by that? You have done a cash sale and now this person is coming and returning it to you. So I don't have a problem. As long as it is a cash sale, that has nothing to do with here. So that is also not relevant. But look at the next item. Purchasers return. Purchasers return on credit terms. You have done some purchases on credit terms, but now that is being returned. So when you return it, what is the double entry? What is the double entry? What is the double entry? For purchases return, what is the double entry? When there is a credit purchase return. All have been forgotten.
Creditors account debit and purchasers account credit.
Creditors account debit.
Purchase account credit.
So we don't generally put it to the purchasers account. We put it to the purchasers return. Can you remember?
Yeah.
We have 4 types of accounts: sales, sales return; purchasers, purchasers return. So debit, creditors, and credit, purchasers return. So here purchasers return 15,000. That's all. We have captured everything. So now it's a matter of balancing. Right. Now let's try to balance it. 675. 675. So what is the balancing figure here? 675 means here 85. So you will get 590. What is that? That is cash. Debit cash, credit here. Okay. Now let's balance this. 400,000. 400,000 here. So here the balancing figure is 300,000. What is that? Again, cash. Debit creditors, credit cash. Credit cash. Okay. So basically, this is what is expected as working. Okay. But you shouldn't be spending more time on this, doing this. You can do a simple working also. If you are thorough, you can do a simple working. Okay. If you want, you can take a photograph. Let's move on to the next. So the answer will be cash received from debtors is 590, cash paid to creditors 300,000. Next one. Magnolia and Sons purchased a machinery for 3 million, paying by a check, which includes value added tax of 240,000. So which means what? Now you know when you go and purchase something from the market, it will also have a VAT. We have to pay VAT. What is the VAT percentage? What is the percentage? Value added tax percentage is what? You have to update it with the current context.
8%.
Yes, it is 8%. Value added tax is 8%. Any product that you buy in the market, if it is including VAT, you have to pay VAT at 8%. That is normal. If you go to a hotel or restaurant anywhere, when you dine in, you know, on top of whatever that you have taken as food, on top of that cost, you will have to pay VAT at 8%. Then you will also have the service charge. That is separate. But we don't consider about the VAT. Right? Now even in your mobile bill, you have VAT. They say government taxes. What is that? That is VAT. Right? So here also, they say you have paid, Magnolia and Sons purchased a machinery for 3 million. In this 3 million, there is 240,000 is VAT. Then they say, if the Magnolia and Sons cannot reclaim VAT on fixed assets, what are the journal entries to record the purchase of the above machine? So, generally what happens is, you can claim certain portion of your VAT for tax purposes. Right? Here they say, you can't claim this VAT. So, if you are unable to claim this VAT means, that is part of your cost. That is part of your cost. So, the machine is worth 3 million means that is your cost. That is your cost. So, the double entry would be debit machinery account credit bank account. Okay. Next one. A vehicle was purchased by Lilly and Company for 250,000 and depreciated at 10% per annum on diminishing value method. Can you remember the diminishing value method? Any idea? Diminishing value method. How do you depreciate diminishing value method? Right. Now they say a vehicle was purchased by Lilly Company for 250,000 and depreciated at 10% per annum on diminishing value method. Estimated salvage value at the end of the useful life of vehicle is 50,000. 5 years later, it was sold for rupees 125,000. Calculate the gain or loss on disposal. So it is on reducing balance, right? So opening balance, scrap or depreciation, closing book value, right? So what has happened? They have purchased it for 250,000. Initially, there is a scrap of 50,000. So this is 200,000. So what you are going to depreciate on reducing balance method is 200,000. So first year, second year, third year, fourth year, and fifth year, right? So 200,000 is what I am going to depreciate at 10%. They say 10%. At 10%. So when you depreciate at 10%, what will happen? 200,000 at 10% is 20,000. So 200 minus 20 is 180. At the end of the first year, it will be 180. Then 180 at 10%, 18,000. So that will give you 162,000. Okay, 162,000 at 10%, 16,200. 16,200. So you have to do it quickly. What is the answer there? So 145,800. Then 145,800 into 10%. That is 14,580. So 14,580 minus 14,580. How much is that? 131,220. 131,220 into 10% means 13,122. 13,122. That will give you 118, not 93. So after 5 years, your net book value is 118, not 98. 118, not 98. Okay. So now you are supposed to calculate the gain or loss. Gain stroke loss. How much it will be? You have sold this 118,000 worth machine to 125,000. So sale proceeds minus net book value gives you your profit or gain, that is 6,900.
Excuse me, sir.
Yeah.
250,000 into 10%, isn't it 25,000?
No. You are referring to this, right? You are
Yes,
referring
sir.
to this, right?
Yes,
This
sir.
is what? This is what? Scrap value. That is not the depreciation. Depreciation is starting after that.
Okay, sir. Okay, thank you, sir.
I just showed it here because just it is easy for us to understand. Otherwise, every time you will have to deduct this. Every time when you are taking this value, you have to first deduct this and take it. So what I did, I removed the scrap value first. Now I have the book value. So I am taking that throughout my computation. This is the scrap value that is given there.
Okay, sir. Thank you, sir.
Okay. So you can take a photograph or a screenshot. Let's go to the next question. So the gain on disposal will be 6,902. The last question. Using the following information, calculate the working capital of Gardenia Insurance Company as at 31st December 2019. Sorry, there is a mistake which I have done. So it should read as 31st December 2019 and 31st December 2018. So they are asking you to calculate the working capital for 2019. 2019. So what is working capital? I explained at the beginning. What is working capital? Working capital is current assets minus current liabilities. Current assets minus current liabilities. So find out what are the items that will come under current liabilities, sorry, current assets, and what are the items come under current liabilities. That's all. So under the assets, if you look at it, other than the fixed assets, the remaining items are all current assets. Cash, cash at bank, premium receivables, sundry debtors, all are current assets. Similarly, in the liabilities, apart from the long-term loans, rest of them are all current liabilities. So what is your current assets? 25 plus, and they are asking for 2019. So this column is not relevant at all. So 25 plus 10, 35, 40, 43. Current assets is 43. What is my current liabilities? 12, 4, 16, and 2, 18. So 43 minus 18, and working capital is 25,000. Okay. Right. So it's almost 1 now. So we need to wind up. Right. So what I would like to tell you all is the level of revision that you have done so far is not sufficient. That is what I can see. Right. So you will have to do your revision part if you are to do well in the examination, because right now, as I can see, the level of revision that you have done is not sufficient. Okay, so please do revise all the work that we have done, right? And also I have given you certain tips how to handle it in the examination. And remember, the choice of questions will be very, very important. First thing is, anyway, you have to do the compulsory question. There is no choice for you. So knowing that you have to do the question number 1 prior to the examination, at least try and do 4 or 5 papers, the reason papers by yourself. First you may go through and then you do it by yourself. And if you find any difficulty in understanding certain things, you can always refer to me. You can either email or send me a WhatsApp, right? Whatever. I have given you the number, mobile number, as well as the email address. So you can approach me, one of the two. Maybe I may not be spontaneously respond to you depending on my work, but I will anyhow respond to you maybe the course of the day or maybe the very next day. I will respond to you. So question number 1, you have to try and do it. First, familiarize yourself with the format, right? I explained in the class and we did 2-3 questions, how you will structure the question, the format, what are the things should come in, right? And then the approach, what we need to do. First, we need to do the adjustments, and the adjustments have to be marked against the trial balance. If they have given a trial balance, you have to mark it against the trial balance. Then from the trial balance, you have to mark the items as whether it is asset, liability, income, expense, or capital. Then you can easily take it to the financial statements from there. That is how the approach should be. Then today last week and today we learned about the statement of cash flows. Probably I would say, looking at the current trend, that is one of the possibilities of a question that can come, right? But there is no guarantee or assurance. But in the recent past, it has been tested. So probably statement of cash flows could be a possible question in your examination. And multiple choice, of course, you have to revise the entire subject in the course, because you see this, even this 2021 paper, questions have come from all the areas, almost all the areas. So it could be a combination or it could be a straightforward one. So you have to be very careful. Even Losing out 2 marks is in vain, right? If you are choosing the multiple choice question. And I have also told you how to answer. The first page should have only the answers. Put the question number and the answers. But workings, you can show it in the other pages. Now this particular thing is a working. So this working can be shown in the other pages. Then apart from that is the choice that you have to make with regard to the selection of questions. So apart from these, there will be questions on accounting standards. Now we have learned several standards, right? So there could be questions coming from the standard to interpret, define definitions. Those type of questions have come. So you can go through the past papers and you can understand and you can relate it to the theory that we have learned, and you can find out how to respond to those. And there will be one more question that is on the regulations and compliance, where I have given you a bank's regulations and compliance handout that has most of the theory that is being tested so far, right? So what is an audit committee? What are the duties of an audit committee? What is the duty of the auditor? What type of opinions that they express? A lot of things have been given there, but all those are theory, right? Technical theory. So rather than going into writing those type of theoretical questions, you can always do numerical questions where you can easily score, right? But I'm leaving it to you all for you to make a choice between the questions. But anyway, three questions maybe, like I would say, it is given. Compulsory question, multiple choice, and one other question like the cash flow and all, or bank reconciliation for that matter. Even bank reconciliation is a possible question. So you need to be very thorough in those areas. Bank reconciliation, statement of cash flows are some of the areas that you can be easily tested. Okay. So what I would suggest is don't wait till the IBSL announces you the examination date, right? It might very soon happen. So better for you to start now itself, do a thorough revision work, and then start doing the past papers. As I told you, now I have requested IBSL and they have uploaded around 5 papers, I think. The required 5 papers are there in the portal. So you can download it for yourself, have the PDFs printed, have the question papers, time it, and do it, right? You can take some foolscap sheets if you want, do it, and take a photograph and send it to me wherever you have issues. I will respond to you. Okay. That's all I have to say. And I would like to take this opportunity to wish you all good luck and all the best. Try to do the exam well. And in between, if you have any clarifications or questions, please do send me an email, or maybe you can contact through WhatsApp from the number that I have given whenever you want it. Because I know it's very difficult with this virtual platform learning, but I hope that I have given my best to make you all during this journey. So whenever you need further help, support, you can always contact me with those 2 sources. I don't know whether every one of you remember my mobile number. It's not 77 335 6638. Okay. So this is the one that I have my WhatsApp also. So not 77 335 6638. Right? You can always contact me on that number. Okay. Right. All the best and well done for the examination. Good luck.
Thank you, sir.
Thank you, sir.
Okay. Hope you have taken down the mobile number if required. And also I gave you the email address, so you can approach me using one of the 2.